Uh, and we at Tech Mahindra have now started embracing what is called the hybrid world. So let's look back. Uh, a year ago, when I met many of you, I did share with you that we have launched our new framework, which is Next.Now. Next was all about business transformation, value transformation, cultural transformation, digital transformation, and now was more to reflect the urgency and the agility. I think both for our employees internally and for our customers, I think it has been a wonderful Next.Now year. The Next.Now year saw us taking some bold steps, some new age technologies, and many of you participated with me in Hyderabad and my colleagues in Barcelona when we launched Metaverse. But all I can say is that TechMverse, Metaverse, AI, data, 5G, and cloud, and the connected solutions all coming together in TechMverse to bring Next.Now for our clients has been the theme and the achievement of this 1 year. Overall, I can only say that, started the year with just a little above 5 billion, closing the year just about 6 billion. Very, very happy to see the progress. This is, as per Rohit Anand, our incoming new CFO, he likes to take, give us a pat on the back. He believes this is the best performance in terms of growth we have had in 7 years. So anyway, I'm sure when we interact with him, he will give us more details. But the reality is it is a growth of 17.3% year on year. The growth overall reflects our commitment to clients, commitment to employees, commitment to the value that we create for the customers, and commitment to Next.Now. And I'm happy that CME was always the North Star. They are doing very well. BFSI joined the $1 billion plus club. So welcome to the Agarwal and his BFSI team to the $1 billion plus for Tech Mahindra. Overall, I can say I'm satisfied with the continuing pace of large deal wins. We again are reporting about $1 billion of large deals. Generally, the four-pronged strategy that the company communicated to many of you, company with a purpose, we continue to bring laurels to the organization by winning hearts and winning almost every medal that had to be won for ESG. I think more than this, it motivates Tech Mahindra 150,000 associates. The second part was more about, the product platforms. The company continues to invest in products and platform, and these platforms are more geared toward business process as a service. As a matter of fact, one of the large deals that we have won is really for this year is actually a large contract from a bank where we will be running some of their processes as process as a service. So I think the product and platform strategy seems to be working reasonably well. The third area where we have invested heavily is on people to be ready for hybrid working, people to upskill themselves, people to be able to work from their hometowns. It doesn't matter whether it is a Vijayawada or a Vizag. It doesn't matter if it's a Warangal or a Hyderabad. The point is, we invested in tier 2 cities. We opened 15 new centers. We invested in global delivery centers. Our Mexico centers have gone up, because the delivery is happening from at least 4 new centers in Latin America, 4 new centers in Europe. So overall, I can say is the global delivery center model is working very well. And now we have people who represent 95 countries who come to work for Tech Mahindra. The fourth focus was on performance. We clearly do know that culture of Tech Mahindra as a family company, but we also now have brought in a performance management system, which is basically online, which is basically defines your BSC, or what is known as Measure What Matters, OKI, and we do it on a much more regular basis than only 1 or 2 appraisals in a year. I think that focus on performance has worked very well. So overall, I can say when I look at the programmatic approach that we have taken last year, I feel a lot more confident about FY'23. So Q4 headlines, Milind, instead of me sharing, my request is, why don't you share? I don't know if Abhilasha, you queued up Rohit or Milind for sharing all the quarterly results. At the same time, I'm also happy to say that we have continued with our dividend policy. We had earlier, if you all recall, we had declared 15 rupees as an interim dividend. The board has recommended a final dividend of rupees 30 per share. So you all spoke about capital allocation, 45 rupees continued, and we have spent as part of our capital allocation reasonable amounts on M&A. So overall, great foundation, continued journey on Next.Now, very, very confident about the fiscal year 2023. And I know there's a usual commentary about Ukraine, Russia, or the Fed increasing rates. I'm sure we will cover it, and when we individually talk to you. Thank you again. Thank you for attending the call. Handing over Milind to take us through the Q4 and overall results.
Okay, thank you, CP, and good evening to everyone. Let me take you through the Q4 financial. Our turnover for the quarter was $1608 million, which is up 5.4% in constant currency terms. Okay. The growth was, more or less balanced. Growth in the enterprise segment was about 5.8%. Growth in CME was about 4.8%. Apart from that, the deal win in this quarter again crossed 1 billion, and that's the second time in last 2 years. Our overall deal win for the year are about $3 billion, up by about 50% over the previous year. Okay. The EBIT for the quarter was about $12 million, marginally lower as against $228 million in Q3. The EBIT margin was about 17.2. There was a pressure coming from a lower utilization by about 100 bips, and because of the higher salary and retention costs, which we have seen because of the supply pressure on the supply side. Okay. Then we had an additional charge on account of depreciation and amortization as a result of additional investment that we have had in the last quarter on plant and machinery. Basically the hardware and software, and also because of the amortization in Q3 and Q4. Now, some of these will actually part of this is a one-time charge, and so that will, as we go along, we should see benefit from that flowing in. So EBIT for the quarter was about, as I said, 14. EBIT was impacted by these two factors. Our other income for the quarter was about 42 million, higher compared to 30 million in quarter 3, and primarily contributed by a higher forex gain. We continue to follow our hedging policy consistently, and that's helped us to maximize forex gain during this year. The tax rate for the quarter, one of the redeeming feature was lower at about 17.5%, and that is because of one-time reversal of tax provision, which is on account of SEZ related benefits. So the SEZ, because of the growth in the pickup in the investment, as well as our decision to move to a new tax regime where there are no SEZ benefits, the investment in plant and machinery in next 3 years will be available for the SEZ benefit reserves that we have created. And so the tax provision that we have created on a conservative basis on account of SEZ reinvestment reserves will not be required. So there is a reversal on that now. So our overall tax rate for the quarter is about 17.5%, which was 27% in Q3. Okay. So the net profit for the quarter is about 12.3%, an increase of 30 basis points over Q3. Okay. Our key free cash flow for the quarter was about $111 million, 56% of PAT. Full year performance, we are almost touched $6 billion. We are at 5,998 million, a growth of about 17.3% over the previous year. Okay. During the year, communication business grew by about 17.2%, and enterprise business grew by about 17.4%. So both businesses have grown strongly. On the EBIT margin for the year, we have seen for the year it was at 14.5%, which is about 30 basis point improvement over the previous year. Okay. Our free cash flow for the full year stands at about $595 million, which is about 80% of our profit after tax. As CP said, the board has declared a final dividend of 30 rupees per share, which will take it to 45 rupees. Okay. So that's about the financial highlight for the quarter and for the year. Maybe, Vilasha, we could open for question answers.
Before that, if Vivek would like to talk about the M&A strategy for the annually.
Thanks, Abhilasha. Just from a strategy perspective on M&A, as we've stated before, it's all about fulfilling white spaces in our capability stack and our offerings to our customers. Last 18 months has been we've been very busy in plugging a lot of gaps in our offering portfolio with a number of acquisitions, which we've talked about before. I think as we go into FY'23, we will be very focused on integrating those acquisitions, driving synergy, being able to take new propositions and new service offerings to our clients, our 1,200 clients globally. That'll be the primary focus from an M&A corporate development perspective. We will be selective when it comes to new acquisitions, and any gaps in our portfolio which are still out there. We will look to plug those gaps from a strategy perspective.
Thank you, CP, Milind and Vivek. I would now like to thank the audience for joining us today. We will close the live streaming of the conference and start with a one-on-one Q&A session. Please note that along with CP, Milind and Vivek, we also have Rohit Anand and Jagdish Mitra who are available to answer your questions. You can write your questions in the Q&A tab, and in case we're not able to address your query due to time constraints, we'll take it offline after the call. Taking the first question, Tech Mahindra has had a good run in FY 2022. What is the company's growth roadmap for FY 23? What are the sectors that will drive growth?
Agarwal, you want to take this?
Sure, CP. So, if you look at our FY'22 growth, CME has had an outstanding year from a growth perspective. A lot of it driven by the demand in 5G. We've seen large deal wins as clients have started to roll out 5G networks and commercialize them. We do expect CME and when you go to media and entertainment, there is a great uptake in the metaverse service offerings. We are looking at that as a big growth opportunity. And as we've stated before, outside of CME, we obviously, CP spoke about BFSI for the first time crossing $1 billion in run rate for us. We've had a great fiscal 22 with a 19% year-on-year growth, and we do expect to keep that momentum going into fiscal 23. And then high-tech, healthcare, life sciences are other areas and manufacturing, which we are focused on from a growth perspective.
Thank you, Vivek. The next question is from Romita. Hi, can you give us an idea of the demand environment? Have clients raised any concerns about the geopolitical issues and inflation-related cost pressures?
Vivek, you want to take it?
Yeah. So I think the demand scenario remains robust across industries and markets. I think there is a potential worry about both inflation and the geopolitical situation, and they are obviously interlinked. But we haven't seen any impact on demand scenario from our clients as of now from any of those things playing out.
Next question is from Shivani Shinde. Can you give the breakup of the $1 billion TCV? Which sectors these deals are coming from and the nature of them?
Rohit, Milind, you want to answer this? Rohit.
Yeah, Rohit, you.
Yeah. So, team, can you please bring up Rohit on the screen so that he can answer? Rohit, please go ahead.
Hi, can you hear me?
Yeah, clear.
Yeah, so, it was fairly well balanced from a deal win perspective. As CP mentioned, we got another quarter of 1 billion deal wins. I think just from a sectoral perspective, from the quarter, we won a deal in, a 5G, which is one of our biggest deal in 5G in Europe, which we're working on a greenfield operations there. So that was a big significant win from a communication standpoint. And similarly on enterprise, we have multiple wins across the segment, be it on the retail side on transforming their platform or on healthcare, where we continue to expand our presence given the focus we're delivering there. So it was well balanced between the vertical and the comm segment.
Thanks, Rohit. The next question is from Vivek Kumar from Informist Media. How much average salary hikes were seen in FY'22? How much hikes is company expecting this year?
I think, as you know, with the attrition being where it was really multiple, more than one appraisal cycle. So I think, I don't know whether I have the right numbers right now, but I think the average salary hike was about 8 to 10%. And this year, we still haven't really, worked to decide, because our cycle actually starts more in July. So we would be able to give you a firm answer when we meet during the July board meeting.
Next question again from Shivani. What is the total investment in the company has done for M&A in FY'22?
Rohit or Vivek?
So I think, Shivani, I think for FY'22, we made a total commitment of about $900 million across all our transactions. All of it would not have been paid out yet. Some of it will be linked to performance in the form of earnouts over the next 3 years. But our total commitment is about $900 million.
She has a follow-up question on our back to office plans. CP, would you like to comment on that?
I think I did that in my opening statement, that I love to come to office. To me, ideation is equal to innovation, and innovation is equal to collaborative working. For a lot of people, working from home is convenience. It reduces the commute time, and it gives them more productive hours. Number 3 is that, yes, we need to be secure, we need to be safe. So it is hybrid working, and all of us are now in a hybrid working mode. We will not be issuing directives as a company for working from office. However, few clients, few processes, and few managers may decide on their level. So client, obviously, we all respect processes. Like, for example, my engineering team, they require very sophisticated tools. They require to be able to play around with a lot of equipment. Now, those guys have always been working from office because you cannot create that environment at home. So it is hybrid working.
The next question is from Romita. Can you give us the number of freshers hired in FY'22 and the expected fresher hiring for FY'23?
Rohit?
Broadly, I think we've articulated it before that our priority here is juniorization, and we'll get more and more freshers in the organization also from a cost perspective. So we've done more than 10,000 hires in the last financial year, and our strategy will continue to be on that path to build on it and make sure from a pyramid standpoint we drive the right balance and the right mix of juniors in the organization.
CP, on your answer, Vivek is asking for a clarification. Was 8 to 10% average salary hike overall during the year or per cycle?
No, it is over the year.
This is the last question that we'll be taking, everyone. This is from Sai. What is the reason behind sequential degrowth in retail manufacturing verticals?
So I'll take that. From a retail perspective, we usually have a ramp up in our business process unit, which peaks in the previous quarter. Due to that, we have seasonality this quarter, which is pretty well known. That's a trend we've seen. Because of that, there's a trend. From a manufacturing standpoint, I think, if you look at through the year, we've grown more than 12%. So it's just a quarterly variation and timing. But overall, we feel given our capability on digital engineering that we're focusing on and all the focus on electrical side, we will continue to move forward with a significant growth as we look at manufacturing. That's a core vertical for us.
Thanks, Rohit. And thank you everyone for joining us. We'll now be concluding this call. Request you to please reach out to me or the team in case you have any other queries. The recording of this conference will also be available on our website and social media channels. Thank you once again.
Thank you.